It's Thursday, the 19th of February, 2026. Welcome to the Fast 5 Business News by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Sean, 5 stories, 5 minutes. Before we do that, a reminder, hit follow on the podcast, please, especially if you're listening on Spotify through the Daily Drive playlist, which is disappearing very soon. So please hit follow so you can keep hearing us. Story number 1, real wages in Australia went backwards last year as rising inflation ate into take-home pay packets. The erosion really challenges the federal government's claim that it is addressing the cost of living crisis, as well as RBA commentary that said that people are finding things a bit easier. The numbers, Sean, nominal wages rose by 3.4% last year, according to the Bureau of Stats. Inflation, though, was 3.8%. So real wages, essentially what your pay can buy, fell last year.
Yeah, and generally you did better if you're in the public sector rather than the private sector. So there were state public sector agreements signed, some money for aged care workers late last year as well. Also interesting was that the share of jobs recording an annual wage of change of more than 4% was its lowest in 3.5 years. We're just not seeing as many jobs paying money and people shifting around. The wage growth is about what the Reserve Bank expected.
Politically, though, this is good news, you'd have to say, for the reinvigorated opposition. Yesterday, we had Liberal leader Jane Hume blaming the government for the drop in real wages, saying it has ignored productivity, it's got no plan to tame inflation and strengthen the economy.
Yeah, then Treasurer Jim Chalmers said one of the best ways to help people with the cost of living was to boost wages. Fair enough. Government's done that, though he conceded nominal wages had risen, but not real wages. The figure really makes you wonder whether there is much relief in terms of cost of living.
Yeah. Story number 2, National Australia Bank's net profit jumped 30% to $2.2 billion in the December quarter. That is a record result that sent its share price up more than 4% yesterday. Australia's largest business bank said home loans and business banking had jumped, as had operating expenses, though.
Business banking is NAB's heartland, but Commonwealth Bank and Westpac to a lesser extent are gaining market share. So NAB's got about 22% of the market, CBA 19%, Westpac's about 16.5%. Business banking is just becoming more profitable, more popular in recent years. Higher interest rates could hurt that a bit. All in all, we've had 3 quarterly reports from NAB, Westpac and ANZ, 1 half year from CBA. Pretty good result for the banks. In fact, those 4 have added $72 billion in value this month, according to Global X.
Story number 3, the Stokes family controlled SGH Limited and NASDAQ-listed Steel Dynamics have launched an improved $14.2 billion bid for Bluescope. It is the 5th attempt by the American company to purchase Bluescope. Sounds like they want it. Yep. And the buyers said that it was their best and final offer. The previous bid was worth $13.2 billion. This one's about 8% higher. It's a big jump up.
Yeah, sure is. If successful, SGH will keep Bluescope's Australian division. Then Steel Dynamics, the NASDAQ-listed group, that'll own the North American operations, including a flagship mill in Ohio. The Bluescope board said it is evaluating the offer. Its share price jumped only 3%, suggesting there's a little bit of scepticism among investors about whether it will get approval.
Story number 4, oil and gas giant Santos will cut 10% of jobs and has placed its oil and gas business in Australia under review after reporting a 35% drop in full-year profit on the back of weak oil and gas prices. You might remember Santos was the target of an abandoned $36 billion takeover bid led by Abu Dhabi State Oil Company last year. The group abandoned the bid. Santos's share price dropped 2% yesterday. The difference now is the group is worth about, $21.2 billion. That's a long way south of that $36 billion figure.
Yeah, sure is. The bottom line was hit by softer prices and an increase in some costs, notwithstanding a weaker than expected result. Santos actually upped its dividend. Chief Executive Kevin Gallagher was awarded 90% of a controversial $6 million growth bonus granted back in 2021. He said the 400 job cuts would right-size the business.
Last one, story number 5. JP Morgan Chase in the States aims to open over 160 branches in more than 30 states across the US this year, part of a multi-billion-dollar investment into its bricks and mortar network that really reflects a broader bet by US banks on Americans' enduring fondness for in-person banking. They actually want to go in and talk to somebody. The largest US bank by assets is planning a major expansion in states at North and South Carolina, Florida, Pennsylvania, Kansas, Massachusetts, Tennessee. It's part of a commitment made in 2024 to open more than 500 branches within 3 years.
So according to the FT, JP Morgan Chase wants to be the dominant holder of retail deposits. The report has this great chart on bank branches per 100,000 adults in countries where, the vast majority use digital payments. So Australia actually has a relatively high number of bank branches, way more than countries like Netherlands, Germany, Sweden, UK, even more than New Zealand. Countries where bank branching is strongest, though, Switzerland, Spain, Italy, France and the US.
All right, there we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thanks, Michael.
It's Thursday, the 19th of February, 2026. Remember to hit follow on the podcast. Very important. And if 5 minutes isn't enough, you can find our longer daily show called Fear and Greed, wherever you listen to podcasts. I'm Michael Thompson, and that was the Fast 5 Business News by Fear and Greed. Have a great day.